Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, good morning.
Hi, morning.
Morning, folks. I guess we're starting off this week on a bit of an optimistic note, right? Because the markets kind of found their mojo, and the bulls will hope they can continue the charge.
Well, that's right. You've got one queue that's out of the way, the domestic queue that we've been waiting for, the Bihar elections. And now all eyes on, hopefully we get a trade deal soon. So lots to work with, though, with regard to this Bihar election outcome.
Absolutely. And I think, that outcome on Friday was, of course, spectacular. And we'll talk more about this. I mean, of course, the other one was it's actually pretty positive in terms of the picture out there, and expectedly perhaps a trade deal sometime down the line as well. But let me just start from the beginning, right? So this is all, in that sense, known to the market. I'll start with something where there is a little bit of, not fear, but a little bit of anxiety. And I'm starting with something which did not happen. So Kospi on Friday sold off 4%. And thankfully, and I'm using the word thankfully, we did not see a repeat of some of that in the US session. Only partly true though, right? And why do I say that? Nasdaq futures on Friday actually briefly dropped about 2% into open. They finally ended about 0.13% higher. I mean, that's the cash Nasdaq closed about 0.13% higher. The S&P 500, and by the way, it broke the 55-day moving average, which is the Nasdaq. That's a level which has been largely held all the way from the Liberation Day lows in the month of April this year. The intraday breach, and then we managed to close above it. The S&P 500, that recovered over 1%, 1.3% from the lows, and that ended absolutely flat. So, the final closes in that sense for Friday are kind of meaningless. Similar kind of picture on the bond prices as well. So the 10-year Treasury yield saw almost a 9 basis point reversal. So we ended about 3 basis point higher to about 4.15%. So the point I'm making is, especially the worry in that sense may, in the incremental next move in that sense, perhaps what we need to be watchful for is the US and what may happen in the US. Because you just look at some of the price action over the last few days in the US. Sometimes intraday, always okay by close, sometimes not okay by close, but that is rarely so. And it tells you that maybe, people are getting a little anxious about what lies ahead. I mean, it's nothing, there are those who are worried about the underlying sort of US consumer and the health of the economy and bankruptcies in the US, etc. I'm not even going there. I'm just talking about the both high and relative absolute P multiples for some of the high growth areas like AI, etc. Okay, so that's that, right? On the bond market, Fed hawks continue to express skepticism about a December rate cut. And there were two gentlemen who spoke on Friday, adding to that skepticism whether inflation is still running too hot, etc. Oil prices were up 2%. We're at about 64 plus. Geopolitical concerns in that sense, both out of Russia, Ukraine, and Iran as well in the Gulf. You got gold, which was on the back foot. Again, broader kind of liquidation move, but that was more intraday. US shutdown ending. Markets, of course, are waiting and watching for data. We perhaps get the September jobs data, which will come out on Thursday and Friday. Thursday or Friday, I mean, most likely Thursday, but we'll see. The Bureau of Labor Statistics is expected to release a calendar of data. Remember, there's no October data, most likely, as the White House has said. So the September number, in that sense, becomes important. And it's a big week for earnings as well. NVIDIA will report numbers on Wednesday, and that, I think, will be important for the overall equity sentiment. But it's not just AI. I briefly mentioned the U.S. consumer. Walmart will report, Target will report. And I think, markets will be watching closely what those numbers are really showing. On Sunday, yesterday, Treasury Secretary Bessent was on a television channel saying that hoping to finalize a rare earths deal with China by the end of November, by Thanksgiving, basically, by that time. So, and, we'll talk more about China a little later. But I think that's the bulk of it, right? It's in the US at the margin, a little bit of worry whether we perhaps see one round of shakeout. I mean, markets are not breaking, but maybe will they bend is the question. Now, just to tie in the levels here, they don't change very much. Targets 26,100 on the Nifty. Support at 25,777, which is the 20-day moving average. And then the 40-day exponential, which is 25,486. The Bank Nifty support is 58,004, the 20-day moving average. That is the 20-day moving average. And then the swing low is the 57,158 levels. So those are overall numbers, what we're working with. GIFT Nifty is indicating a 50-60 odd point higher start, and then we will pick it up from there. The F&O positioning and the stats there, Nigel is standing by with exactly that. Nigel, over to you.
Well, we had a big flare-up in the final hour of trade in Friday's trading session, and that's where the Nifty ended in the green. And, the NDA coming up on top in Bihar, that's definitely good news for the equity markets, ensures continuity as well. But there are a couple of other questions that are coming about now with regard to the fiscal map, because the fiscal deficit in a state like Bihar is already at elevated levels at around 6% or thereabouts. And with this cash being doled out, how do they fund this is going to be important. So the fiscal mat is still in question. While there are hopes now that the India-US trade deal could actually get a leg forward. And that's because Bihar produces a large amount of maize. And remember, India's demand for maize is actually quite high, while the US has surplus of maize, which INCRED points out could be one of the factors that helps in moving in the direction of getting a trade deal. So that's going to be the next important cue from an Indian market perspective. The FIs, yet another trading session they sold, and actually they sold larger than what we've seen in the previous few trading sessions, so around 4,000 crores or thereabouts. Moved to the futures data. The FIs, they've been adding shorts, and that's precisely what they did. Close to 9,500 short contracts is what they added. Even on the stock futures, they added close to around 3,000 contracts. So there were shorts that were added in Friday's trading session in a market that actually zoomed up in the final 60 minutes. And if you look at positioning right now, as a percentage, it's reaching the upper end of the range. Normally, when the FI net short positions reach around 91, 92% or thereabouts, that's when you see a bit of a short covering bounce that takes place. We're almost there. 89% in absolute terms, it's around 1.7 lakh contracts, while the clients, they are net long with close to around a lakh contracts on the long side. Move to the options data, 26,000 call. For the last few trading sessions, you've seen a lot of open interest addition out there. The premium's now at around 70 rupees or thereabouts. While the 25,700 put, well, out there, the premiums come down to around 35 rupees. So just plugging in the options data, looking at the technical levels as well, the first reference point on the downside actually comes in at around the 20 DMA. But if you're looking at the options data, then you're factoring in that the support comes in this 25,650 to around 25,700. The 20 DMA is a little higher than this, but the options data suggests that this is a crucial first level of support that we're looking at. On the upside, going by the options data, the resistance comes in at around this 26,080. The Nifty Bank, that's the one that's been leading the way even in Friday's trading session. That did a U-turn, and that's why we moved up. The reference point clearly is that 57,500 mark, because we've gone there numerous times, and from there, we have seen a bit of a bounce. So the Nifty Bank will have to continue its good form. It's already at an all-time high. So that one will have to lead the way. Let's see how it goes from here. But that 26,050 odd mark is the resistance zone. The US trade deal, can we see something in the near future?
Absolutely, that remains the biggest trigger perhaps now with the Bihar elections out of the way. By the way, the Asian region is actually more red than green. Barring South Korea, so the Kospi after that 4% slide on Friday, it's pulling back. Kospi is up about 1.7%. But other regional markets, whether it's Japan, where the numbers have come out, in terms of growth, and there is actually deceleration that continues in Japan. That Hong Kong is down as well. Mainland Chinese markets are down. So Asian screens are more red than green. We'll see how that plays out. Let's just get the implied open. I mean, we can see it on the ticker over there. It's suggesting that the bulls will keep building on that positive streak, that momentum that we saw on Friday. Right now, it's indicating a start almost 60 points higher. Okay, so let's, get along the way. We have our equity call of the morning coming through. Sanjeev Prasad of Kotak Institutional Equities says that the market may be stuck between one, positives of stable macro, stabilizing earnings, and a likely strong recovery in earnings in FY27, and two, the negatives of rich valuations and an uncertain global outlook. He also says that the retail sentiment continues to be fairly optimistic, but would need watching given dwindling trailing returns. He adds that the second quarter was quite mixed in the sense of results and earnings. He said numbers were distorted by GST rate cuts. Okay, so that's a view from Kotak Institutional Equities.